two companies that investors are talking about the most. Two companies operating in the AI sector, but from two completely different angles. One of them is already huge and another one is still small but expected to continue its growth. We're talking about two giants of the stock market, Palantir and Nvidia. In this video, we will cover whether or not it's still a good time to enter either of these stocks if you haven't yet, when will be the good time to sell each of them if you are already a shareholder, and whether to sell them at all. Stay tuned because throughout this video I will explain what is our put on these stocks, what are our positions and what we're planning to do in the future for ourselves. Hey there and welcome to the Market Monkeys channel. It's Julia here, and as you already realized, today we will compare two very different companies in their size, in their revenues, in their growth rate, and what unites them is the fact that both of them are riding AI wave. People and investors are talking about two of these companies the most on the stock market. Both of them are still growth stocks, and both of them will likely make a history of their own. So, because these two companies are very different at what they're doing and where they are in terms of progression and growth, we will not be comparing them in a straight manner. We can't compare business of Palantir to business of Nvidia. It simply won't be right. But what we can do is to compare the relative metrics of their stocks and to see whether or not one of them, or maybe both of them, is a good investment right now. Let's start our comparison from price return. And it may be too obvious to simply look at the behavior of the stock in the past year, but in the end of this video I will explain why we started from this metric. Basically, from both of these graphs you can see how much you would have made if you invested in both of these stocks exactly 1 year ago. We can see that Palantir made about 285% and Nvidia made only about 175%. By the way, from the phrase that Nvidia got only 175%, you can see that we're pushing our luck and we're getting too full of ourselves with this bull market that simply won't end, but it's a topic for another video. So I suggest that we divide our comparison to 4 major categories, and inside each of them I will stop for a few more points. So the first and very important metric is business model and profitability of each of these companies. Here on this graph you can see that Nvidia is beating the hell out of Palantir in terms of revenue growth, but only in the last 2 years. The good piece of news for Palantir investors is in their amazing stability. So if you want both revenue growth and predictability, Palantir is the stock for you. Of course, if we are looking only at this metric, from the other point of view, we can easily see how much better Nvidia is using this AI wave. Now let's take a look at the gross profit margin situation. Gross profit margin simply shows you how much the company is keeping out of each dollar of the sales after covering the expenses for production. Gross profit margin from a business perspective shows how well the company can scale their productions and how much they're controlling the prices. So, in the next graph you can see that Nvidia's gross profit margins vary over the years, although their lowest point in the past 5 years is at about 56%, which is an amazing result. In general, very few sectors have a possibility to achieve gross profit margins as high as we see in Nvidia's case. And in the case of Palantir, we again can admire the stability of this company. Say whatever you want about Alex Karp and Peter Thiel, but these two guys know exactly what they're doing in the business perspective. And if we were amazed by Nvidia's numbers, you can realize how outstanding the Palantir's numbers are even in comparison. If you find this information interesting, don't forget to press the like button and subscribe to our channel. It really helps our channel to grow. By the way, if you want to support us and our research even more, you can do so by donating any sum you see fit by pressing a super thanks button under the video as it's shown on your screen. Now let's compare the amount of cash that both companies possess. Nvidia has a sick amount of cash, about $40 billion. By the way, it's a good explanation why they're walking around and investing a few $100 million here and there, like in the case of SoundHound. By the way, we have a full analysis of SoundHound on our channel, so you can check it out later, but this is not the craziest part. The craziest part that Nvidia has approximately 1.23% of their market cap in cash. Palantir, by the way, as you can see from this graph, has much less cash, but they have approximately 3 or 5% the stake of the company in cash, which also explains the weird investments in specs that they did over the past couple of years. Basically, from amount of cash of both of these companies, we can see that both of them are really wealthy and rich. On the next graph that we created ourselves, I want to show you what is expected for Nvidia and Palantir in terms of revenue growth in the future by analysts. It was obvious that Nvidia's growth could not last forever, and the insane growth ratios that we saw over the past couple of years would eventually come down, and it is expected to start happening already in the next year. Palantir is pretty stable as always, although analysts do not expect Palantir to see some insane revenue growth like we saw in Nvidia's case. So we see that basically analysts are predicting that right now is the peak of revenue growth for Palantir, and this is actually the point where we do not agree with analysts that much. We actually believe that Palantir's revenue growth rate over the next 10 years may pick up. Reasons for that are very different, beginning from more and more commercial customers would want a piece of software like Palantir is offering, to Palantir slowly becoming one and only leader in this area. Because in this AI sector, the amount of data that you gather and you are processing actually gives you a large competitive advantage. Palantir started long before everyone else. Palantir right now has a lot of clients, and they're progressing in this data gathering much faster than any of their peers. We have a full playlist on our channel where we break down everything related to Palantir, so if you want to know more, you can go and check it out later. The next category is of course the valuation of the company, and here I want to look only at PEG ratio. PEG ratio is price to earnings ratio that is divided by growth. Why PEG ratio and not price to earnings? Imagine you want to compare two companies. The PE ratio is telling you how much you're paying for each dollar that the company is earning, which can make one stock look more expensive than the other. However, the PEG ratio adds another layer to this equation, considering how fast the earnings of these companies are expected to grow. For example, the stock with PE ratio of 30 might be considered as overpriced, but if their revenues are expected to grow at 15 or 20 or 30% over the next couple of years, this valuation actually is justified. From another point of view, you have a company with a PE ratio of 20, but their earnings are expected to grow only 5% in the next year. And of course, this company will be more expensive in valuation term than the first company. It's especially useful when comparing companies in a high growth sector where PE ratio might not tell the whole story, and this is exactly our case. So the sector median for these two stocks is the same. I remind you, we are talking about Palantir and Nvidia, and the sector median is 1.9. Palantir forward PEG ratio is 6.3, which is much higher than it's supposed to be. And I remind you that the growth is already included in this metric, so you cannot justify this high valuation by the fact that company will continue to grow. Nvidia forward PEG ratio is 1.2, which is actually much lower than the sector median of 1.9, and can indicate that we have a room for the stock price to grow. It might be shocking to some of you, but by this metric, we can actually say that Nvidia is seriously undervalued right now. Now, analysts' rating. The thoughts of analysts are varying dramatically regarding Palantir. We see a range from $11 to $75 per share with an average price at $39. Can Palantir go even higher? It definitely can. We have actually a couple of videos where we explain why, especially in the videos where I explained why I sold a part of my position at the price of approximately $38 and another part at approximately $43. I am still heavily invested in Palantir. The stocks of this company take approximately 40% of my risky portfolio right now, and I'm actually thinking to sell another chunk and to buy the stocks back when the valuation will come back to the more sane levels, and it definitely will. The current stock price with a PEG ratio of approximately 6.5 is simply not sustainable. Now I want you to take a close look at Nvidia's numbers and to actually pay attention. The lowest projected price by Wall Street analysts for this stock is about $125, while the actual price is approximately $135. Analysts are expecting to see an average price of approximately $170, and the highest price right now is $220 per share. So here is another proof that Nvidia stock is undervalued and is expected to grow in the near future. We are invested in Nvidia as well, by the way. I have approximately 9% of my risky portfolio invested in Nvidia, and Vadim, my co-host, has approximately 50% of his risky portfolio invested in Nvidia. So as you already realized, he won't be selling anytime soon. And I am actually thinking to buy a little more shares of Nvidia for myself. Now let's come back to Palantir. As you see, Palantir is a great company, is an amazing company that is heavily overpriced. Remember, on the beginning of this video, we started from comparing the return of both of these stocks over the past year, and it was obvious that we cannot make a comparison only based on this. We cannot look at the graph, say, wow, Palantir got 100% more, so this was a better investment. It doesn't work like that, right? The fact that Palantir stock is worth right now approximately $60 per share doesn't mean anything besides of the fact that investors simply wanted to boost this stock to the insane numbers. I am invested in Palantir myself. I believe in this company, but I'm trying to stay objective as much as I can on my investments. I sold some part of my position at approximately $40, and I stand behind this decision 100%. I am explaining this because there are always people who write to me that I made a wrong decision or that I lost on profits. But to claim this is the same as to basically look at the stock price return and to say that Palantir is better simply because their stock rose more than Nvidia's. We are not playing here in guessing where the price will go. We are not playing here on trying to catch the highest point and exit then. We are making assumptions, we're calculating the numbers, we're trying to evaluate the metrics, we're trying to stay objective on our investment. As I already mentioned, right now there is no reason for Palantir to be priced at $60 besides of the positivity of investors. Palantir is a bubble, and whether this bubble will burst and the stock price will crash as well, or maybe the management of the company will make something insane and the results will justify the current stock price, but it probably won't happen because usually management of Palantir likes to give a guidance a little bit smaller than the actual numbers will be, and B, if Palantir will still be a bubble then the stock price will rise significantly together with this news, and once again we will be left with overvalued company awaiting until this bubble bursts. I like Palantir. I will be holding stocks of this company for many years from now. But my point simply is that if I wouldn't be invested right now in Palantir, I would definitely not buy stocks of this company right now. You must make your own due diligence and base your decisions on that. Don't forget to write a comment, press a like button, subscribe to our channel. If you want to support our channel and our research even more, you can do so by donating any sum you see fit by pressing super thanks button on YouTube. I thank you for your time. Hope to see you on our channel soon. Happy investing!